So now, is there really more room to run? Joining me now, EMJ Capital's Eric Jackson. It's good to see you again. And you actually think the answer to that question is yes. Why?
I do. I'm going to take the other side of what Joe and Victoria just offered on the last segment. I think it's perfectly logical and rational what the market has done in Q1. When I was on with you, Scott, in January, I said we could just be at the beginnings of a 10-month rally, because the playbook that I think makes the most sense for what's going on right now in the market is 1981, when inflation finally rolled over, started dropping like a stone, and the NASDAQ took off on a 10-month rally that took it up 100%. We've had a great Q1, but this could just be the beginning of what could be a much broader and longer rally.
What if the Fed isn't kidding, right? I mean, we've had more Fed speak just today, yet again, suggesting more rate hikes are coming. They don't believe that inflation's dropping like a stone, apparently.
They have to say that. They have to be guarded. They can't seem like they're getting behind some rally. They have to talk tough. But the reality is that month by month, inflation keeps ticking lower. We all have to be guarded, but we have to make investments too in the meantime. And the fact is that tech has done penance for the last 2 years. Tech investors have been out in the wilderness, and so they were. Now is the time when we have to look ahead, even if we are going into a recession. And the fact is that these multiples on a lot of tech companies, not just FAANG, but broaden out to the smaller and mid-cap size, these are at levels back in 12 years ago, 13 years ago in some cases. And those are going to get interesting for a lot of investors who are just not exposed enough to those types of names.
I'm looking at the notes from a pre-interview you did with one of our producers where you say, I saw the show yesterday where Adam Parker was saying this rally has been driven by the big FAANGs so far this year. I disagree. What do you mean you disagree? It's a fact. It's been driven, like the 7 biggest tech stocks in the market have carried the entire market.
Well, that's a function of market cap. These names sneeze and the market takes notice on the upside as well as on the downside. But the reality is some of the names that I was pounding the table on with you, Scott, in January, Coinbase up 80-some% this quarter, Tesla up, I think it's 59% this quarter, Shopify up 36%, I believe, this quarter. Those are great years, let alone quarters. So the gains in tech haven't been limited to just the FAANG names. Certainly those matter most from a market's point of view. I think what's interesting to watch from here, though, Scott, is that if I'm right and this thing broadens out, people have to say, okay, what else looks interesting? And there are some other tech names that are flat on the year, maybe some even who are down on the year. There's some value names that are kind of have been left aside, and I think people are going to say, what about those names? And that's how a broader, longer rally takes place. So I'm particularly interested in some other kind of lesser known names who have yet to really participate this year in the rally.
It sounds to me like you are more bullish overall than you've been in quite some time.
I think we got the off-ramp from the 10-month rally with Silicon Valley Bank, obviously, but we're back on the interstate now. That's in the rearview mirror. We're looking ahead. So, and I think you really have to be stock specific. Victoria said, I only want kind of fortress balance sheets on the last segment. One of my favorite names is Bombardier, the private luxury jet company. That's a value stock if there ever was one. It's got a terrible balance sheet. It's got too much debt. But guess what? They are improving. Their debt is getting paid down. They are guiding to doing $1 billion in free cash flow in a couple of years. And that has the chance to make a major leap in value as kind of the enterprise value shifts away from the debt over to the equity. There's a profitless tech company I love right now. It's probably my favorite long, called Freyr Battery, making electric batteries. We don't want to buy electric batteries from China anymore, and yet there are very few pure play Western companies. The Inflation Reduction Act incentivizes these kinds of companies. So I like those kinds of lesser known names that could still have big gains ahead of them.
Sure, but you declare sort of the the issue's over around the banks, but you know as well as I do that, earthquakes often come with aftershocks, and quite often they're powerful aftershocks. So are we too quick to just say, hey, the coast is clear, all's good?
Well, if everyone coming on the network was as bullish as I am, I would be very worried. But the fact that I think, a side effect of what you're talking about, Scott, is that so many people are clutching their pearls right now, worried about what's going to happen next, what's the next shoe to drop. That just is sort of fuel to the rally to continue on. So, we have to monitor sentiment, but it's still lousy, for the most part out there. So that, to me, signals that this thing can continue.
All right. Eric Jackson, we'll talk to you again soon. Thank you very much.